Well, welcome back to another episode of Money and Medicine. Today, we've got a very special topic that we are going to talk about, and that is the financial aspect of what we call black tax. We've got a special guest in for the second time, Mr. Cedric Pella. Cedric, thank you so much for availing yourself as always. We enjoy talking to you, and thank you for sharing your knowledge about this topic.
Yeah, Laka, thank you for having me again. Looking forward to it.
So, Cedric, I'm going to jump right into it. I think let's start with the basics. Just tell us a little bit about what is black tax. What is the fundamentals about black tax?
Yeah, sure. I think, Stefan, it means different things to different people. With some people, they kind of look at it through a negative lens and a negative connotation. With others, it's a bit more positive. But again, I think the disclaimer I want to put on the table is I'm not the black tax subject matter expert, right? Like I'm going to talk about it from my own perspective and maybe define it the way I see it. It's one of those things because of the way in which you grow up and the socioeconomic conditions of a family unit that you come from. When you're the first person to get a proper job in your family or graduate, for example, and make a bit of money and attain a little bit of economic freedom, there comes the aspect of having to give back to family. And that can be for a number of different reasons. For me specifically, it came in the form of having to help out with renovations that were going on at home, that were going on for quite a long time. And when I started working, I had to contribute to completing them. Okay. So for me, that was kind of a black tax in a way, but not necessarily through a negative connotation. But in essence, it means giving back to family once you start working at a very early stage in your career as a person in a family unit.
I think it's also something that we see quite often. And when we deal with clients, the majority of them are starting to give back by way of renovations.
Yeah.
Whether that's to their family's house or parent or something, or even building a new house.
Yeah.
But the majority of them are giving back to the way of renovations.
Yeah.
I've also done a bit of reading to have a bit of an understanding about black tax, and what I've seen is it's not always just monetary value.
Yeah.
I see a lot of people are giving away or giving back by way of, if you are the first one in your family moving to Joburg, as an example, where family members come and stay with you,
Sure.
Because you have a property. If they've got a job interview, you end up having like 6 people, for instance, at your property, and you have to basically provide for them at that time.
Yeah, sure. So it's not just monetary. You're right, Werner. At times, it's also giving back in the way of time and resources, whatever you may have. You may be the first person in your family to have a vehicle, and that means you're the one that's driving everybody around, and you're doing all the grocery shopping. It could be a property where you're housing family members. It could be paying for the education of siblings and other family members in your family as well. So whatever that responsibility may be to your family, you being able to provide that, and at least you being in a position to provide that, is a form of what many people would describe as black tax.
Yeah. So I think to boil it down, it also includes obviously the wider or the broader social responsibility.
Yes.
That they have, or that they have the privilege obviously to take on.
Yeah.
What is some of the financial challenges that you've seen, or some of the financial challenges that you can maybe share when it gets to black tax?
Yeah. I think one of the biggest ones has to do with when you incur debt. As a result of you wanting to give back. And it's something for me personally that's been a challenge. When I finished schooling and started my first job, I think the first or second month, I entered into a loan agreement with a bank so I could loan some money, because the renovations have been, they've been going on for such a long time. And because I just come out of 4 years worth of varsity, my sibling was also at school. My parents were kind of working but not making enough income to kind of do all of that and support a household. It fell onto me to try and finish those renovations, and I went into debt. I took a personal loan, and that for me was a big challenge, because you can imagine it's your first big loan. I didn't even have a vehicle at the time. Already I start building up some sort of a credit record, and in some ways quite a negative one. But other challenges could be you maybe delaying things like saving for retirement as a result of the, maybe for lack of a better word, burden that is placed on you to give back in a way. And for myself personally, personal savings was something that had to take a backseat. So I couldn't invest from my first salary or even my first couple of salaries when I started working because I had to give back. So some of those challenges may include debt. Another challenge may include delaying savings and specifically retirement savings as a result.
Cedric, on that, you mentioned that you had to take a personal loan
Yeah.
to do the renovations.
Yeah.
What is the expectation, or what was the expectation from your family? Because when you started to work and earning an income,
Yeah.
did they want that renovations to happen as quickly as possible? Is that why you incur the debt? Or could you have some sort of discussion and say, listen, I am earning an income. These renovations was taking a very long time. I'll be the one putting up my hand, so I'll take over the financial responsibility of paying for that renovations. It's going to happen over a period of 12 to 24 months, as an example.
Yeah.
What is that kind of? Is it something? How does it work?
Yeah, sure. Again, it'll differ from person to person. My personal situation was that I was in a position to help, but I was also eager. I felt like it was something I wanted to do sooner rather than later. It was something that I wasn't under pressure to do, so my parents didn't pressure me to do it.
Yeah.
But I felt like it was a gift that I could give. I was in a position, again, and I'm sure you guys probably have these conversations with your clients more. It went back to my money story. So I grew up in a household where debt was not taboo. Debt was just how we paid for things. So both my parents had short-term loans, credit cards. I had clothing accounts while I was still in varsity. So taking out a loan wasn't something I saw as a serious thing. It was just something that, if you were able to do it, do it. If you have a credit score, of course you can take out a loan to do something. So I didn't see it with the kind of serious implications that it would have later in my life, when I was struggling to pay off this loan. So Valen, to answer your question, for me, I wasn't under pressure. For me, it was about getting to the point where there was a need, and I felt I was in a position to fulfill that need, and I did.
Yeah.
You mentioned that you struggled to pay off that loan, or it was a challenge. Going back to that time, would you do something differently?
Yes.
Is it?
No, definitely. There's a lot of things that I think I learned from that experience. So again, that's why when I look at my situation, at least with this topic around black tax, is part of it, yes, did kind of enable me or disable me from being able to save early. Part of it meant that I was taking up debt very early in my career, but I got to learn from some of those mistakes. If I was to go back in time and do it differently, I probably would have decided to save as much as I could have in cash. And in fact, if I think about what I was earning back then, if I used my first 12 months of my working career to save up, I would have saved up the exact amount that I'd loaned from the bank initially.
Yeah.
So if I just given it a little bit more time, been a bit more patient with myself, explained the situation properly, I guess, to my family, I think they would have been very kind of understanding, and I would have been able to do all of that cash. But another thing that I think I also got to learn along the journey is with giving back and helping to take care of my sibling. At the moment, when she finished school, she didn't immediately get a job. And there was some financial assistance that was required at home as well.
Understand, yeah.
But I started to think about how I can do that in a smarter way. And as opposed to kind of maybe giving her a monthly allowance, I thought about how can I maybe encourage her to start a business and give back that way. You know this whole saying around it's better to teach a man to fish.
Yes.
It's easier to give someone money, like just here you go, and maybe give it to them on a monthly basis. It's a little bit harder to teach someone to fish or to start a business, but it's probably in their best interest and in yours if you do it that way.
Yeah.
So there has been a lot of learning around my black tax scenarios and situations where I've had to give back, and a lot of thinking and learning that's come with it that's helped me at least to look at the situation a little bit differently.
Well, Cedric, that's an awesome story. And I think that is sort of what we get on a daily basis. Clients facing that same exact, if I can call it challenges again for the lack of a better word. But
Yeah.
What other ways would you say are there to prepare to avoid these sort of challenges?
Yeah, sure. So more than anything, I think you can save as much as possible towards certain expenses. Avoid debt as much as possible, but use certain vehicles to put capital away and really plan for it. So when I sit down with a financial advisor, for example, if a client sits down with you, you're able to project. If I need 30,000 Rand in 12 months' time, how much do I need to save per month? Where can I invest that? What kind of an interest rate am I going to get? So you can plan for that, right? Planning is probably your best friend in these kind of scenarios. But secondly, think about how you can work smart and not hard. Again, just going back to this analogy of teaching a man how to fish is, in most scenarios, if you think about, I'll use this analogy, it's a stupid analogy, but I'll use it anyway. Think about if you were to give milk to someone. It's one thing to buy milk on a daily basis and give it to them. It's another thing if you bought a cow and it was their responsibility to take care of it, and they get future milk into perpetuity, right? It's an upfront heavy cost. Right? Because to purchase that asset upfront is quite a lot of money, but over time it pays itself off, and actually you are able to solve for that into perpetuity upfront. And when I think about, for example, what my sister and I have done is, we thought about how she could start her own business, and I funded that capital upfront. It was a big capital expenditure upfront, but now her business is working and it's creating an income.
Awesome.
And I don't need to plan for it in my finances on a monthly basis, right?
Yeah.
Now it's her responsibility to use what she has to create an income for herself. So I think that's maybe one powerful way to do it. Whatever the situation may be, if it's with siblings, if it's with parents, find a way that is more sustainable and more efficient in being able to plug that gap that black tax sometimes creates.
Awesome. Cedric, I think just from and this is more on a technical perspective, you mentioned that you gave your sister money to help her start the business, etc. Is there any tax implications or financial implications that one might miss by donating money or giving money, to siblings and parents and third parties?
Yeah, sure. I think when you think about giving money, especially large amounts of money to siblings and to parents, you're obviously kind of faced with this thing around donations tax, right?
Yeah.
Because you're donating the money. Yeah. So you have to think about the implications of that on your finances and on your taxes.
Yes.
Obviously, SARS does allow us to give away a certain amount of money as a donation, and you can write that off, and they give you a bit of an allowance. But again, this is why it's so important to sit down with a financial advisor and say, I'm thinking of donating a certain amount of money to a sibling or a parent. Versus maybe if you structured it as a loan, it'll be a little bit different. Again, for my specific situation, I think, and for the majority of people, to sit down with your sibling or you to sit down with your parents and say, I'm going to loan you the money, may be a very difficult conversation. And to be honest, I don't think I would have wanted to structure it as a loan to my parents to say, we're doing these renovations, I'm going to loan you the money at a certain interest rate and I want that back. I think that would have created a lot of complexity and the kind of relationship that I had with my parents, it wasn't going to work for us. But there are financial implications to these things. And if you are thinking about structuring it as a loan or giving away a certain amount of money as a donation, it's really good to sit down with a financial advisor. Another implication, and I'm sure you guys see this as well, is if I on a monthly basis am responsible for giving a certain amount of money to a sibling or a parent or both, it creates dependency. Immediately you start thinking about your retirement savings and how trustees look at beneficiaries when someone passes away. So if you have a retirement annuity or a pension fund at work, when you pass away, even though you have a beneficiary nomination, the trustees of retirement fund first look at dependents before beneficiaries. So another thing you have to think about is if you're giving money away on a monthly basis, you do create a bit of dependency. The people that are benefiting from that dependency can claim dependency when the trustees of your retirement fund, if you've passed away, start thinking about how to distribute those assets, right?
Very true, yeah.
So again, it's important to sit down with a financial advisor to see what are the implications of giving money on a monthly basis? What are the implications of giving capital up front to my parents or my siblings? So not only is black tax sort of an emotional kind of thing that we think about from a sociology point of view, it does create financial implications.
And I think you have to basically go sit down and try to take the emotion out of it as well.
Yes.
Because I think a lot of people, as soon as they start working, there's that emotional thing where you have to start immediately giving back to your family.
Yeah.
But from what I gathered now, it's important to just take a step back and sit down and actually have a bit of a thinking about this black tax consequences.
Yeah.
Because if you just dive into this immediately and start giving this loans and supporting and creating that dependency, and then about 6 months later, now you're thinking about all the financial consequences that this has raised during the past 6 months, it might cause some problems going forward.
Exactly.
I think all those problems can be dealt with, and you can fix them. But it's important to just have that conversation and maybe to call a family meeting. Definitely it's going to be a difficult discussion. By no means is going to be an easy discussion. But maybe put your family also, I also want to say put your family into silos, where I think your parents, it's going to be very difficult to go away from the dependency side.
Yeah.
Because you maybe have to pay for their medical aid, you
Yes.
maybe have to support them financially, because it's not going to be as easy to teach them how to fish
Yeah.
at their age
Exactly.
in starting a business, because it's going to be much more difficult for them to start a business and getting away from that dependency.
Yeah.
But whereas with your siblings or younger family members, you can teach them how to fish.
Exactly.
And they can then start supporting you and alleviate that financial dependency of your parents, where everybody can start contributing towards that as well.
100%, Werner. And I think about like my nephew, for example, and he's still very young and hasn't even started school yet. I'm already thinking at some point, if he needs to go to varsity, if I put 250 Rand away for him a month, it at least at some point when he turns 18, there's a bit of money that's there to help, right?
Yeah.
If he doesn't need the help, great. Then like I've saved up a bit of money for whatever I want to use it for.
Yes.
But if he does need the help at that point, it doesn't become something that has to come into my budget that, it kind of takes away from what I would have otherwise had to save towards other things. So Werner, what you're talking about around planning is so important. I'm not sure if it was Einstein that kind of said, if I had 60 minutes to solve a problem, I'll spend the first 50 minutes thinking about it.
Yeah.
And then the last 10 minutes actually implementing the solution, right? And I think at times, at least from my own experience, there is so much value in actually sitting down and thinking first, planning, getting a little bit more advice, sitting down with family members to see how can you come up with a scenario or a situation that is beneficial for all parties, but more specifically for yourself and your finances going forward. And if you can plan and you can put those plans in place, I think it alleviates also some of the negativity. And sometimes you're left with the emotions of, oh man, like it becomes such a burden for me, or like, oh, I've spent the first 12 months of my career kind of helping out, and I've missed out on a couple of things. I haven't been able to purchase a vehicle. Perhaps if we were more intentional about having these conversations, it would be a little bit easier for us to implement good, solid, efficient, sustainable plans to deal with this gap that black tax creates.
Yeah, and I think also, if I can call like first generation wealth, first generation professionals, if they can learn from the mistakes from previous, generations or from previous professionals, I think you again, it's that balance point, because we always say you're building up or you're playing catch up. So every
Yes.
generational wealth are always playing this catch up
Yes.
to say, well, we still need to provide for the previous generation, but we also need to provide for
next.
the next one. So when do you get that sort of sweet spot to say, well, I still need to, without being selfish, but I still need to focus on my own generation and planning for myself as well, but still not neglecting, the other generation, or still not neglecting my family members.
Yeah.
How do you get that? Again, it's probably, case by case, but in your
Yeah.
personal experience, how do you get that sweet spot?
I mean, I'm there. I think I'm at a point in my career and my life where I'm in a position where I need to start thinking about, potentially if I'm going to have a family of my own and children of my own, and think about them. But at the same time, I also have a family that isn't as dependent, but at some points in time, I do need to give back and support, right, between myself and my spouse. So how we sort of deal with it is, firstly, we've always had a budget, and we plan our finances to the T. There are certain things that are must-haves that are selfish, but these are things that I'm not going to compromise on. Retirement savings is one of them. And the reason why I say I wouldn't compromise on my retirement savings is if you don't take care of yourself when you retire, you immediately become a burden on the next generation.
Yeah.
So what is the first thing you can do to ensure that at least the next generation coming after you has a chance, is make sure that you can take care of yourself when you are retired. Because I think for many people that are in a situation where black tax is a real thing, it's perhaps where parents, for example, have not saved enough. And where you're having to give back on a monthly basis because they don't have enough savings, because they had to maybe use some of those savings to put you through school, et cetera, et cetera. So as an individual, the first thing I'm thinking about is, let me not make the same mistakes. I'm in a better position now where I have a bit more cash flow than what my parents did when they were working. So firstly, let me plug that retirement hole for myself. And then once I've done that, I've at least given the next generation coming after me a chance. And then I can start thinking about things like, okay, what other savings must I do? So I start saving for my child's education now. If I know that in the future I want to have children and I want to start a family, what can I do to start saving for that today? and I use certain vehicles to save towards that. I already shared that I'm already thinking about my nephew and when he needs to start varsity, and I'm already saving money for him. So in my budget, I'm making sure that I am maybe breaking it down into different silos, into different buckets, and I'm trying to see how best I can save towards each bucket, or at least kind of allocate expenditure towards each bucket to make things a bit more manageable. So I'm taking care of myself, I'm taking care of my dependents, but I'm also taking care of the generation coming after me.
You know, and I think that's exactly what Vanna was saying. You planning. You sat down, you looked at every decision, and you made an informed decision. And you got obviously some prudent counsel in to make an informed decision.
And I think that planning is very important.
Yes.
You're not going to achieve it if you're not planning. And also, I think it's just important to start.
Yes.
You don't have to think that if I can't afford it to contribute 5,000 rand towards 5,000 rand a month towards my retirement plan, I'm not going to do it. Just starting off by 500 rand is also going to make a difference. There's one particular client that comes to my mind, and she's actually a great example of this. I can see that she's contributing towards Black Tax. She's got quite an extended family, and she took out funeral policies for about 12 of her family members. She started investments for their education, for the children's education. But at the same time, she's putting a little money away for her retirement. Currently, she's not buying a car, anything like that. But there's a lot of planning that went into this. And I think that's the most important thing. You just have to start and see what you can do.
Yeah, of course. And I mean, sometimes there's some social pressures, right, that come with you being the first person in your family to graduate, or the first person to, have a job at a corporate. And I definitely felt that pressure of, oh, well, you work for a good company and you can afford, so why don't you buy a car? And not just any car. Why don't you buy a car that kind of shows that you've made it and you're successful? And again, like I'm not going to belittle these social pressures. They're there. And they're real. And at times you also want to prove something to yourself that, you know what, like I want to celebrate the fact that I've been able to be the first one in my family to do these kind of things. But at times there is a lot of value in just sitting down and just talking. And being able, like that, and like you're saying with your client, being able to say, what's more important right now is not a vehicle. What's more important right now is for me to make sure that I've mitigated against certain risks. And I think that's the beauty of independent financial advice, right? You're in a sweet position as an independent financial advisor to say, let's talk about your risks and let's mitigate them. Because if unknown risks are still there on the table, you're going to purchase a car, but if you haven't thought about income protection, if you lose your job, that car is gone. And then you're not even in a position to help your family at all. So maybe there are other things that are more important for you to think about initially. Make sure that you've got those out of the way, tick those boxes, and then start thinking about those other things that are, in my opinion, nice to have. At least that's how I thought about it. My first 3 years of working, I didn't have a vehicle. And it was intentional not to have a vehicle because there were other things that were more important for me. But then again, I made some mistakes that I've learned from. I think it's important that we talk about these things and people are having open, honest conversations about them as well, especially with financial advisors.
And something you mentioned now, and it's like an income protection policy. A lot of people don't understand the value of it. They don't understand why do I need an income protection policy? And it's like you said, it's so important to have that protection because currently you're not only your own biggest asset, but you're actually your family's biggest asset. You are the one that through your ability to work, you are earning that income every month and you are supporting them. So if you don't protect that income, you're basically, there's going to be that generational gap again, which is going to be created through that loss of income, which might happen.
Exactly, yeah. And I know like at times and when I say we, I think about like people in my sort of age bracket and my peers, think about insurance as this kind of grudge purchase. Like, oh man, like not another policy. But the reality of it is when I think about insurance is I can pass over this risk to someone else, an institution. And I don't have to bear this risk. So if something happens and I can't work tomorrow, I'm not the one that's sitting with that risk. It's the insurer. And I pay them a premium to take on that risk for me. But you're so right, Werner. It's that it's not just about me and my income, but the fact that that income has an impact on the generation coming after me, it also has an impact on the people that are dependent on me. So I think also one of the ways that you can maybe prepare and protect yourself regarding black tax is also making sure that some of these risks are mitigated against, so that if anything does happen, you have a plan B to start giving back as well.
Cedric, how long do you support someone financially? Is there some sort of tipping point where you have to say, listen, I've been contributing and supporting you for X amount of years. I know it's difficult, but is there some sort of guidance?
Sure. It really does depend on the situation. I think it really depends on the situation that you're in. If you're supporting someone who, for example, is not working, like parents who are not working, who are retired, maybe all they get is a state pension. The reality is that you're probably going to be supporting them for their entire lives. It may be a little bit different with younger siblings, where you can give them an ultimatum and say, look, yes, I'll pay for the studies, I will pay for certain things, but at a certain age, at a certain point, you're going to need to be able to take care of yourself. Also, I think there is a lot of value in also being an enabler to their independence. So enable their independence too, if you're in a position or if you're supporting someone where you know that the support can be limited. If you know that the sibling is going to get to a point where they're going to finish with school, and then you have to say, look, you have to get a part-time job, or let me help you get to a point where you can start providing for yourself. But it is a very unique sort of circumstantial type question, because it depends on the circumstances that you're in. As a person, you also need to kind of plan your finances and see, well, if I continue supporting this person for the rest of my life, what does that do to my budget long term? What does it do to my ability to save for retirement? What expenses and investments and goals am I foregoing to support a specific person if I'm in a position to make that support limited? So it really does depend. For my wife and I, there are times where we, in certain months, we'll buy groceries and go and take them home. It's not an expectation, but we try and make sure that when we do have the ability to give a little bit more, we do. But then we also have this agreement with our families that, like, in certain months, we aren't able to give at all. In certain months, we may have issues that we need to deal with. We have emergencies, financial emergencies, and the like. So the consistency and the longevity of your giving does depend on your specific situation. But you're also in a position where, if that is limited, to make sure that you limit it as far as possible and enable people to become dependent on themselves and independent rather than dependent on you.
Awesome. Cedric, thank you so much. Again, always, it's such a pleasure listening to you. I think just to summarize, is there any last tips or financial pointers that you would like to share to some of our listeners, or maybe some reading material, something where you personally also valued from?
Yeah, sure. I read a heck of a lot. So there are different blogs and such. There's one blog that I really like. It's titled moretothat.com. Moretothat.com is a blog that just talks about everyday kind of things. And there's a specific blog post on that blog, moretothat.com, that speaks about how travel is no cure for the mind, but it really speaks to more psychological things about us as people and the things we sometimes try to run away from. Awesome. I got a lot of value even for my specific situation and my black tax scenario, if I can talk, if I can call it that. But if I was to leave, kind of our listeners with anything, is that I sometimes see black tax similarly to how taxes that a country or a government levies should be benefited from. So in an ideal scenario, we as citizens who are working pay tax so that government can use that revenue to work on things like infrastructure and hospitals and schools and and roadworks and things like that, to make the lives of the citizens better, right?
True.
That's ideally why we should be paying tax and how it should be used. The reality is a little bit different, but we're not going to get into that. When I think about giving back to my family, I'm thinking about how I can enable them to do the same thing. So when I sit down, plan, give back in such a way that is efficient, that is sustainable, it allows not only for them to take care of themselves, but if they have the ability to become independent one day through the plans that I've put in place to meet that specific gap, it also makes my life a lot easier. So being able to enable them to get to a point where they are self-sufficient. So I've helped them not only with the money, but with knowledge, with conversations, with smarter plans. Ideally, I may get to a point in my life where black tax is never an issue for me, never an issue for my children and the generations to come. So I think there is a lot of work that we need to do as a generation today to make sure that black tax doesn't become a reality for the generation that's coming after us.
Awesome. Well, thank you, sir. I appreciate it. It's nice having you. I think for our listeners out there, if this is the very first time that you are watching this channel, you're welcome to go to the bottom of this page, share some comments, share some of your thoughts, share that with some of your colleagues, and also hit the like button for more future content. You're also welcome to check out our website on www.moneyandmedicine.co.za. The purpose of Money and Medicine is to add value, to empower you to make informed decisions. Until next time, plan the plan.